Just when you thought the tech sector may have been safe, out came Meta earnings, shares tumbling, as Don was saying, more than 20%, bringing other social media companies down with it. Joining us now to weigh in on this stock in the group, Mark Mahaney, head of internet research at Evercore ISI. Mark, great to speak to you. Let's place this in context. Obviously, a big miss, massive disappointment on revenue and user trends. Is it really a sign of this company entering a sudden maturity phase, or can they get through this?
Well, we do know that there were some factors here that were really strong last quarter, too, and that's the Apple privacy changes. And then there are some macro challenges that most marketers are going to have to deal with. So the first is really the issue. Facebook had developed, thanks in part to Apple, a really wonderful ad attribution targeting tool that was sort of taken away from them. And they're going to take longer than I thought, and it's going to be a bigger impact than I thought to work through that. I like the stock here. I'll buy it on this correction, but there's no question that was a flop of a quarter, especially in terms of the guide. And the company's got a lot of wood to chop in order to get its fundamentals back to that 20% revenue growth that it needs to have to satisfy investors.
You know, when we talk about the ad targeting tools that have been diluted with this privacy change, I just wonder how much of it is a matter of, the oldest cliche in advertising is you're wasting half your budget, but you just don't know which half. If, in fact, marketers are they suffering from not being able to target, or essentially were people opting out of getting targeted for ads, not really great money spent in the first place?
Well, I think marketers are being put at something of a disadvantage, and then marketers are also deciding to take their dollars somewhere else. Yeah. Where's that? Google. So Google's got this wonderful tailwind now, and it's had it for a couple of quarters, and it's going to continue to have it as ad dollars move to where the ROI, especially on search, but also on YouTube, is really just demonstrable. And there's a third factor, Mike, I forgot to mention. Of course, there's TikTok. I haven't heard Facebook management talk about. I don't know how many times they mentioned the word TikTok in their script last night. It may have been 35 times. Now, I will say this, just with some context. This reminds me of the Cambridge Analytica scandal that Facebook dealt with in 2018. And when that happened, this company went out and just trashed its forward guidance. So I do give them some credit. I think they are probably over-talking some of the threat here. But it's just like this combination of macro factors, Apple privacy changes, TikTok, emerging competition for users and usage. All of that's boiling into that flop.
At the same time, Mark, you mentioned the major transitions that Facebook has gone through, and we've seen them time and time again, actually, since its IPO. And this you might consider its third major change, if you count the shift to mobile advertising, which, they got basically condemned for not getting at the time. They eventually got it, and then we saw revenue accelerate subsequently. The same thing with stories, and now we're at this other inflection point. Are we counting Facebook out too soon with the 22% drop, or are things different this time around, I dare say, in terms of the context of the markets, in terms of where Facebook is at as a company?
Well, Melissa, it's a good setup you have. The market is clearly throwing Facebook out. But in addition to that, the company is obviously more mature now than it was in those last investment cycles. And there is TikTok. So the market's right to near-term freak out and react negatively to the flop. For long-term holders, one of the things that keeps me in here is that we're now pretty close to a trough multiple. We're like a turn away from that 17 times earnings that it based out in 2018. I do think this company can recover. There's no question there are headwinds. What's the growth like on the other side of this in the back half of this year and going into 23? I think they're going to be able to recover to 20% revenue growth. I think they'll get back to margin expansion. So I've got a pretty healthy 20 to 30% earnings grower. I think that's what it can sustain at going forwards. You can buy this thing at a discount. That's, you make money buying these high quality assets when they're dislocated. I still think Facebook's high quality, Meta is high quality. And I'll just two other points. Meta, the TikTok, the competition is there from TikTok, but it's primarily to the Instagram asset. It's not to WhatsApp, and it's not the core Facebook or Facebook Messenger. And then there's still these other option plays that Meta has, like the metaverse. So I just think that there's still more cards for Facebook to play. We'll stick with the asset. We'll stick with the buy, even though we think it's going to be dead money near term.